Hi everyone, this is Owen from Mission Winners, and welcome to this edition of Market Edge Ahead of the Trade. I'm excited to bring you a special episode where we'll break down key market opportunities and insights to help you sharpen your strategy and maintain your edge. We're starting things off with Pat Walker's in-depth ETF review, where he'll highlight critical sector trends and actionable opportunities.
Thanks, Owen. Now let's get into the ETF review. We systematize things at Mission Winners, and I've been doing it this way since the last century, and it works. By the way, I'm just talking the late 1900s, not the late 1800s. Just wanted to lay that out there. Weekly on the left, daily on the right. What looks kind of choppy on one pattern might make good sense on another. Look at that clean base on the weekly. Isn't that nice? And it lifted off here, and here it is here. So now what's it doing now? It's chopping around a little bit. You can see it on the weekly. And always study. This will help you. Study price and volume relationships like, oh, it's going up. Well, that's decent. Oh, boy, it fell on pretty heavy volume. Oh, okay. Well, it went up on a slight pickup in volume, but it was less than it fell on. It's just a little choppy at this point in time. What is it doing? It's basing. What does that tell us? Be careful buying stocks in this ETF group, okay? But eventually it should start to maybe lift, and it will tell you what to do. That's the beautiful part. We don't have to forecast. We let price and volume tell us what to do, and it works great. Let's move on. Another ARK innovation, next generation. And you can see internet based right here, lifted off nicely on the weekly. That coincides with this area right in here, and it's right in here, and it's working. It's chopping around right now, back and forth until it forms a base. Be a little careful buying in this group. Let's see some power. Okay, there we go. And that's good to know. Biotechnology, stay away. That's it. I mean, look at the trend on the weekly. It's down. Look at the trend on the daily. It's down. Stay away from biotech. Done. Folks, I'm really serious. I'm not trying to be funny. It's that simple. Just move on. There's nothing there. Energy's kind of picking up. It dropped down hard here, and it's picked up a little bit, but it's loose. This is called a wide and loose patterns. Wide and loose patterns indicate high investor emotions. High emotions and good investing decision-making are mutually exclusive, okay? So it's kind of sloppy here. Let's see what it can do. I will say the plus, though, it is starting to lift up on steadily increasing volume on the weekly and the daily. So maybe energy, if it could form a handle or something in here, may be a group to look into. There we go. Continue onwards. Dow Jones Internet, basing nicely on the weekly and basing nicely on the daily. A group to look into. FDN. Punch up the top 10 holdings in FDN. You might find something there. There you go. Systematize. IBD 50, just chopping back and forth and back and forth. But notice recently on the weekly, it's basing. Look what it did on this weekly bar. It lifted up, closed in the top fourth of its range on a pickup in volume. Ooh, IBD 50, those are the good growth stocks, okay? Something to look into. There we go. Or the ETF. Gold miners, there's a lot of overhead here still, okay? And you can see it down here even on the daily. So this needs to base a little longer and then maybe start to lift off. 1+ is noticed. Volume is going up here on the weekly on some pickup in volume, showing a little bit more strength. And that's good to know with gold miners. Continue onwards. Gold, same situation. Look at this. Well, this has got lower highs. This high, this high, this high. I'll draw this to help you. And again, at Mission Winners, this is the stuff we teach. I taught this at the IBD meetups. It's got lower highs. It's just, there's still not a lot of power here. Gold. Oh, look at this. GLD. It's going sideways. It's showing more strength. Maybe look into some gold stocks. There we go. What else? Combine price and volume action in your analysis. Look what it did here. Picking up on increasing volume. That's a plus. Needs to take out these tops, and it needs to take it out on volume. That's it. It's a decent base, though. Something to look into in GLD. Microsectors, FANG, kind of chopping around here, okay? I mean, you can see that's loose. These are called wide and loose patterns on the weekly and the daily. Wide and loose chart patterns are indicative of high investor emotions. High investor emotions and sound decision-making are mutually exclusive in all parts of life, okay? So be aware with that. Cybersecurity is basing here. On its daily, it gapped up and it faded off. I'd like to see this base a little bit longer, and then maybe it'll provide an opportunity. But it is showing some strength. Cybersecurity, there we go. Opportunities. Biotechnology, look at that. That's hanging in. This one's doing nothing. What does that say? In 1 second, stay away from biotech. Done. I'm not being cute and funny. There's nothing there. Leave it alone. Let's move on. Online retail is basing here a little bit. What's a big stock in this group? Amazon, right? Needs to start to lift up, okay? And it's loose here on the daily also. So just a little sloppier here. Also note, fell on fairly heavy volume on this bar, fell on fairly heavy volume on this bar. Indicative of institutional selling. There we go. So be a little cautious. Move on. Software technology, it's bouncing, but it's in a downtrend. You can see it's in lower lows and lower highs. Be careful with that. Medicine, look at this pickup. Isn't that nice? You could punch up IHI and see out of the top 10 holdings. I guarantee you're going to find 1 or 2 that made a big move. There we go. It was showing strength the week before, as you can see. You combine that together and you can see right here, it kind of had a low level. I'll draw this to help you. Kind of had a low level cup with a handle in here, and it started to lift off. I'm not saying buy it now, but it was showing some strength. That's why we do this. Mid cap, picking up a little bit on the weekly, a lot of overhead on the daily. So not a lot of power yet in mid cap. Be careful with that. Continue onwards. Aerospace and defense picking up a little bit. That's good to see. Not really leading at this point in time. There's a lot of overhead on the daily and the weekly, but it is improving a little bit. Not a lot of volume, but it is improving a little bit. There we go. You don't have to write it off. Home construction is picking up a little bit, but gosh, there's a ton of overhead supply here, folks. Be careful with that. Just be careful. What's the plus, though? On the weekly, look at that volume pickup. What was part of the catalyst on this, folks? Interest rate movement, interest rate talk, interest rate policies. And you all know this. Falling interest rates. Home builders like, buyers like falling interest rates for mortgages. So a lot of overhead, but it is starting to improve a little bit. Something to keep watch on. Continue onwards. S&P 500 growth's picking up, but it's zigzagging back and forth here, folks. You know, up, down, back and forth. There's a longer base here. It needs to start showing some power. It needs to start lifting up with S&P 500 growth. IWM lagging. Look at that. I mean, it's way down here. Just be careful with small caps. Move on. Real estate. It's still kind of lagging here. Be a little cautious with that. Home builders doing better, but real estate, not so much. Transportation, still lagging a little bit. Careful with that. Airlines look a little bit better. So maybe look into some airlines. Regional banks or banking, it's still lagging here a bit. I mean, it's picking up some, but there's not a lot of power in it yet. Insurance, it's still lagging. Be a little cautious. Please note, I'm not being negative. I'm just reporting what is. That's all. Regional banking, as I said, lagging. Be a little cautious there. Mid-cap picking up. They're picking up a little bit. Oil services is picking up a little bit, but it's not in a real leadership position at this point in time. Maybe by the end of this week it will be. Pharmaceuticals, definitely lagging. Stay away from the drugs. Wait, I should coin a phrase. Just say no to drugs. Oh, we got something there. I think I'm going to coin that phrase. Anyway, pharmaceuticals lagging. Be a little cautious there. NASDAQ 100 is picking up a little bit. Okay. You can see it on the daily and the weekly, but it still has lower lows and lower highs, right? So we need to see a little bit more power. There you go. And we'll be ready for it. Same thing's true with QQQ. Retailing's picking up a little bit. Here's one thing that does catch my eyes. Look at the pickup here on volume. Oh, maybe it's starting to turn a corner. Looking at some retailing stocks. You could punch up RTH top 10 holdings. You may find something there. That is a great tactic, by the way. Cloud computing, kind of turning the corner. You have to see. Silver's still lagging, leave it alone. Steel is still lagging, leave it alone. Semiconductors chopping around here. Back and forth and back and forth. You can see it on the weekly too. Okay, look at this. Oh, it runs up and they take it down and I pick up in volume. Needs to start improving a little bit. There we go. You know what this is, folks? You can see the market's improved a little bit, but there's still some choppier action in certain sectors. That's all. That's it. Not being negative. Spiders, at this point in time, you have lower lows. I'll draw this to help you. Lower lows and lower highs. That being said, though, we always drill down further into individual sectors and we can see strength in various areas. And that really helps us. Stocks that we own. S&P 500 picking up a little bit, but still in a downtrend, starting to turn a corner maybe a little bit. Solar's really lagging, leave it alone. Look at the weekly. Just leave it alone. That's okay. Small caps lagging, leave them alone. Oil. Oh, look at oil. U.S. oil picking up there. Energy. Isn't that nice? Doing this, by the way, we do this every week. We talked about this 4 weeks ago, saying, hey, this is basing here. Maybe it's going to start to pick up. And it did. Look at the base. There you go. And there's a nice trend. Now, I'm not saying buy it now, but that's what we look for. Continue onwards. Aerospace and defense, picking up a little bit, improving. There's some strength there, something to look into. Biotechnology, stay away. Home builders, still lagging pretty bad here. Be careful with that. Materials, picking up some, but a lot of overhead supply. But again, connect the dots. Interest rates are dropping, right? We're seeing home building stocks pick up, right? How do you build houses? You need materials. See how you connect the dots? That's a great lesson. I taught that IBD meetups for, over 10 years. It helps make better investing decisions. And I hope it helps you too. That's my goal. Communication still choppy. Be cautious with it. Energy starting to pick up a little bit. Another energy ETF. Look at that. It had a higher low setup, and it's kind of marching up. It's improving. Maybe looking at some energy stocks. There you go. Financials picking up a little bit. That's good to see. Industrials picking up a little bit. That's good to see. Technology's picking up a little bit, but there's still a ton of overhead here. All right. We need to see that start to show some more strength. There you go. Consumers lagging. Stay away from consumer. Look at that. It's really not doing anything. Be careful with consumer stocks. There we go. Utilities lagging. Be cautious with that. Healthcare still lagging. Not a lot of power. Be careful with that. Consumers picking up a little bit, but still not a lot of power. Metals and mining, stay away. Oh, oil and gas. That one doesn't look too bad, and it hasn't looked bad. Could have been looking to it back in here too for energy. By the way, you can punch up XOP and find out their top 10 holdings. Systematize. You don't need to look at a million of them. Just look at the top 10. That really helps. We don't need to look at a ton of different charts. We'd be smart in what we do look at. And that helps. Retailing. What does that tell you? Be careful with retailing stocks. Software, still not a lot of power. Okay, I'm going to take a small break and hand it over to Owen.
Thanks, Pat, for that thorough breakdown of the ETFs. One highlight that really stood out was your insight on energy starting to pick up with steadily increasing volume. That could present some strong opportunities if the momentum continues. Now let's dive into today's Market Edge lesson, where we'll talk about a critical concept for traders, the power of unfilled gaps, and what they reveal about market momentum. All right, let's dive into something super important. Unfilled gaps. These are one of the most powerful indicators of market momentum, and when you understand them, you'll gain a serious edge in your trading game. So, what exactly are unfilled gaps? Picture this. A stock or market opens much higher or lower than the previous session's close, leaving a visible gap on the price chart. Normally, these gaps close as the market retraces and fills in those skipped levels. But here's the kicker. When gaps remain unfilled, it's a huge signal. It tells you there's urgency and conviction behind the move. Think of it like this. Unfilled gaps are the footprints left behind by the strongest players in the market. They're showing you where the big money is stepping in and taking control. Instead of the usual 3 steps forward, 1 step back, the market is charging ahead without looking back. That's a clear sign of momentum you can't ignore. Now here's why this matters. This week in the S&P 500, we saw not 1 but 2 unfilled gaps in the cash market during a sharp rally. That's a big deal. It means buyers are confident and the market is skipping over key levels without retracing. Moving forward, these gaps become critical areas to watch. If they stay unfilled, it confirms bullish momentum is intact. But if they do fill, that could be an early warning sign that strength is fading. Let's connect this to real-world setups. Take Apple, for example. Apple isn't just another stock. It's a heavyweight, making up over 7.5% of the S&P 500. This week, Apple showed relative weakness, even as the broader market rallied. It's now approaching a key support level near 220. Historically, Apple's pullbacks tend to range between 16 and 18% before reversing higher. If Apple hits that support and then forms an unfilled gap upward, it could signal a powerful reversal, not just for Apple, but for the broader market as well. Now, let's zoom in on sectors. Consumer staples, represented by the XLP ETF, have been holding firm at a double bottom support level. If XLP starts breaking higher and leaves unfilled gaps in its wake, that's another confirmation of strength. These are the kinds of setups you want to be on the lookout for. When unfilled gaps align with bullish signals like higher lows or breakouts, they're often prime trading opportunities. So what's the takeaway? Here it is, plain and simple. Unfilled gaps aren't just a feature on the chart, they're a roadmap to market strength. To use them effectively, focus on three things. 1. Spot the gaps. Keep an eye out for gaps that remain unfilled. They're strong indicators of momentum. 2. Confirm the setup. Look for other signs of strength, like higher lows or strong support levels. 3. Act strategically. When unfilled gaps align with key technical signals, it's time to move. These setups often lead to exceptional opportunities. Mastering the power of unfilled gaps can transform the way you trade. Whether you're focused on futures, ETFs, or individual stocks, this concept will sharpen your edge and help you ride the strongest trends in the market. Now, before we turn it back over to Pat, make sure you like and subscribe. It helps out a lot. Okay, now on to the MAXLIST review.
All right, now let's get into the max list. First up is Apple. Weekly on the left, daily on the right, that's the ADMA. There's no power there. Be careful with Apple. There's no power. Just leave it alone. Amazon's starting to show some strength. I like that. Also note, always study, emission winners, we study price and volume. It was going sideways, and then look what it did. It starts to pick up on a pickup in volume. Max list stock. I'd watch Amazon, okay? Watch Amazon going forward. Look for price and volume. Alibaba, no, there's no power there. Leave it alone. BIDU, there's no power. Leave it alone. Google's picking up a little bit here. On the daily, you can see this, and this is what catches my eyes. Look at the volume pickup on that bar, and it closed in the top third of its range. Go across these tops right here, and I'll draw this to help you. And emission winners, this is what we do, chart analysis, and it's not fancy. It's easy to see. It conceptually makes sense. There's tops right here, and there's base going across here. What else catches your eyes? It lifted up, picked up on a pickup in volume. You might want to watch Google pushing through that line right there. Okay. Now, rules of proper investing. All right. And I taught this at IBD meetups for years, 12 years. Never buy a full position at one time. Ease into the stock. Please, it will help you. I can't stress that enough. And another key point, never average down. These are real world lessons, folks. Okay. Never average down. You are wrong. Do not make yourself more wrong. Okay. Yeah, I'm hardcore about that. Goldman Sachs picking up a little bit. Some of us own this. Okay. Some VIPs own this. And it's lifting up. That's good to see. Had a decent basic go across these tops. It's a little bit extended now, so be careful chasing it. Okay. But just, it's showing some strength. There you go. That's good to know. No forecasting. MasterCard still lagging, leave it alone. Meta, I like this base on Meta. Here's the weekly, here's the daily. Here's the one slight negative, and I have to point this out. It's wide and loose. Oh, look, it's going, it's going, it's going. Oh, look, oh gosh, they knocked the tar out of it. Oh, look, it's going again. Oh, they dropped it down. Back and forth and back and forth. Indicates high investor emotions and also is indicative of lack of conviction. People get in it and they get out of it. So there's a longer base here on the daily and on the weekly, right in here, and I'll draw this to help you. It needs to take that out. It needs to take it out with volume. There you go. And until that happens, leave it alone. It is kind of loose. And again, folks, I'll say it, every time it runs up there, they take it down. There's sellers up there. Be aware of that. You need to see power through here on Meta. Microsoft, there's nothing there, folks. Leave it alone. Netflix, there's really nothing there at this time. Leave it alone. NVIDIA, there's nothing there. Leave it alone. I'm not being negative. I'm not being bearish. I'm just pointing out reality. That's all. If it's not there, if you have to look for it, it's not there, folks. Okay? So a little sloppy at this point in time. Be careful with that. NVDL, same situation. Block, same situation, sloppy. Tesla started to pick up here a little bit. Okay, across these tops. We pick some up, and we're ready for more. We'll be ready for more. Laying it across here. And I'll draw this to help you. I like that volume pickup. This could start to lift up. This be one to look into. By the way, I said a very important word in there. If volume comes into it, watch and see. There we go. We'll be ready with an open mind and no baggage. TSLL, same thing, but it tailed off just a little bit. So not a heavy position. Visa's picking up here a little bit. And we'll do this. Here's this. There's a base right there. And you can see it on the weekly also. Also note, another good lesson. Look at, you don't see a lot of volume on the daily, but then look at the weekly. Oh, it's got volume pickup here. There we go. Takes out these tops with volume. That could be a potential buy. MAXLIST stock. And in all instances, team, in a good market, got to have a good market. I mean, that's imperative, okay? The M in mission winners comes first. What does the M stand for? Markets. Mission, markets, industries, sectors, stocks. Institutional support, outstanding management or outstanding product or outstanding service. And the N in mission, never say never. Never say never. The biggest part of what we do in this business, it's our mindset, folks. It really is. Protect your mental assets also. And that is exactly, precisely why we have simple, clean and simple rules for entry, which then by default gives us clean and simple rule for exit without a lot of indecision making or angst. We just know what to do. There we go.
Pat has done a fantastic job walking us through the MAXLIST stocks, highlighting opportunities like Amazon and Tesla that are gaining momentum. These are actionable insights that can help you stay focused on strength and clarity in your trading decisions. As we wrap up this episode of Market Edge, ahead of the trade, remember, the key to success in trading lies in mastering your strategy, trusting the process, and maintaining your edge. Don't forget to press the like button as well as subscribe if you haven't yet. We really do appreciate it. It helps us keep making videos. This video is released every weekend, premiering Sunday at 2 p.m. Eastern Time. Thank you for joining us, and we'll see you next time.
Thanks so much, Owen, for all your help today. I'm going to treat myself to a nice cup of tea, but I can't wait to catch up with all of you tomorrow when we go through the watch list. Take care, everyone.